Pacific Prime is an international health insurance intermediary. We've worked in the international health insurance sector for over 15 years, and during that time we've become an important distributor for both InterGlobal and Aetna. In fact, for InterGlobal, globally we would be one of their largest insurance intermediaries, particularly in the individual market, but we are also an important distributor in the SME and corporate segment. Similarly, we have a very important relationship with Aetna, both in Asia and in the Middle East. So the recent news that Aetna is going to buy InterGlobal is very important to Pacific Prime, not just because of what we can offer to our future clients, but also for our existing policyholders. We're particularly interested in how the takeover will affect our policyholders in terms of premium evolution, in terms of how benefits will change, and very importantly in terms of administration. So what does the acquisition of InterGlobal by Aetna mean for Pacific Prime and the insurance industry in general? Well, firstly, it's important to note that Aetna is a very large US-based health insurance specialist, in fact one of the largest in the world. Aetna has been trying to grow in the international health insurance segment for the last 10 or 15 years. It's been partly done by growing the domestic book of business being covered outside of the US, so US corporates being covered outside the US. Aetna has an important foothold in the student health insurance industry, but importantly, Aetna is trying to grow in the individual and SME business that's sourced outside of the US. Approximately 5 to 10 years ago, Aetna purchased a health insurance specialist called Good Health. That purchase was very significant and marked the first step for Aetna trying to develop aggressively outside the US. That purchase has been very interesting because although it's been successful, actually it's created some issues with respect to servicing, and most people believe that the purchase of InterGlobal is actually Aetna trying to develop and evolve its understanding of the international private medical insurance industry. The point is that InterGlobal has a very strong reputation for servicing and customer service delivery, and although the purchase is relatively small in the big scale of things, in the sense that InterGlobal is a small independent health insurance specialist, whereas Aetna is a multi-billion-dollar company, so in the big scheme of things, InterGlobal is a very small company for Aetna. Most people believe that what Aetna is trying to do is to develop and acquire the skill set that InterGlobal has, particularly around the servicing model. One thing that's important to note, and is very important for Pacific Prime, is that Aetna purchased Good Health about 5 to 10 years ago. In that intervening period, Good Health policyholders will generally have been fairly pleased, to the extent that premium evolution, the rate of premium increases, has been very manageable relative to other competitors in the industry as a whole, and benefits have also remained very stable. In other words, Good Health policyholders from 5 to 10 years ago have had a pretty good experience since Aetna became the policyholder, the insurance company. One of the downsides, or perhaps downside is the wrong word, but one thing that has come to light is the servicing model around the old Good Health clients. And this hasn't really evolved and kept up with some of the current servicing standards. And there we come back to the point of InterGlobal. So in my discussions with senior figures at both InterGlobal and at Aetna, the rationale for the purchase is largely driven around Aetna trying to develop and evolve their servicing model. This overall then has to be good for Pacific Prime and Pacific Prime's clients, not only for existing Aetna clients, because Aetna is trying to develop and evolve its servicing model, but also for existing clients of Pacific Prime with InterGlobal, because what this will mean is that actually we shouldn't see any downsides for the purchase. In fact, InterGlobal now being backed or owned by Aetna, one of the largest health insurance specialists in the world, will only give InterGlobal a very good platform from which to grow and develop. So what does this say about the industry as a whole? Well, over the last 10 or 20 years, the international private medical insurance industry has evolved, and it's increasingly a market which is dominated by large global health insurance companies, typically health insurance specialists like Cigna, Aetna and Bupa, but also companies like Allianz that have a multi-insurance base, property and casualty, etc. But what is common to all of these companies is that there is a significant economy of scale to operating an international private medical insurance portfolio today. That's both in terms of servicing capability, claims management, evacuation, but also in terms of the global footprint. You need to be able to work with global corporates to have a plan which is common to Asia and the Middle East and possibly Africa or other parts of the world as well. So what we've seen is that over the preceding 10, 15, 20, 30 years, there have been many small startups such as Good Health, such as IHI, which became a big company that was purchased by Bupa. Good Health was purchased by Aetna. So we've seen lots of acquisitions over a period of time, and basically lots of the smaller companies have realized that it's actually becoming, for want of a better word, a big boys game. The InterGlobal purchase is pretty much along these lines, and we would expect over the coming 5 to 10 years quite a few of the other smaller players in the industry to either become very niche players in certain geographical sectors or niche players based on certain product types within the sector, or to ultimately be purchased and taken over by global health insurance specialists.